Good evening, you're watching ETNow. We've got a special show lined up for you on currencies, the Outlook 2017. Emerging market currencies came in fairly rough weather for 2016, but what are the factors in play and the currency outlook for emerging market as a pack and India in particular for 2017. This year is coming to an end now, another one is in the offing. In fact, Indian rupee started 2016 on a red hot form but fell agonizingly close to the 70 level, 69 in fact, against the US. Global factors such as Brexit, Donald Trump's victory in the United States, presidential elections, Italian referendum impacted the rupee and of course its peers in the emerging market currency space. But despite the prevalent weakness against the dollar, rupee has demonstrated relative resilience compared to many other emerging currencies. That was pretty much the main theme. But Trump's win points at a pro-growth stance in the United States. It also raises chances of aggressive rate hikes by a Fed the next year. In fact, rate hikes on the Fed and cuts from the RBI, that is expected in the next meeting, which could lead to further dollar strengthening. That's what the outlook is. So what exactly will be the impact on the rupee against the dollar, and what's the outlook for the entire emerging market currency space for 2017? We've lined up this special show for you with a panel of experts joining in. Irene Xiong, Forex strategist from Singapore, would be on the phone line. Mr. Bhaskar Panda, head of Treasury Advisory at HDFC Bank, would be joining us, and of course founder and CEO of IFA Global, Abhishek Goenka, along with Shogato. He's the economist at Axis Bank. Gentlemen and the lady, welcome to the show. Before we actually start getting your views and your analysis, let's lay the groundwork where we stand right now. And my colleague from the research desk, Poonam Sani, has collated the data points on how emerging market currencies fared this year, where did rupees stack up from here, and how things stand and how vulnerable are we right now in the currency space. Poonam?
Well, what an eventful year of 2016. In fact, if you look at the entire component of the dollar index, we did see the Japanese yen as well as Canadian dollar gaining significantly, but it was Swiss franc, euro, Swedish krona and as well as British pound. All these currencies did lose against the dollar. In fact, British pound lost close to around 16.7%. That is the biggest loser of 2016 on account of course, the Brexit impact. But dollar index did gain significantly during this entire year on account of US Fed rate hikes. Now, if you look at the entire BRICS pack, we are seeing a Brazilian real, a Russian ruble, a South African rand and an Indonesian rupiah. All these currencies have in fact gained, but Mexican peso has lost significantly, nearly 17% on account of US Trump winning the elections. Chinese renminbi is also lower on account of China's slowdown, but Indian rupee remains resilient. The future outlook of 2017 would in fact depend on the US Fed rate hike, Trump economic plan, as well as we should also be seeing some amount of impact on account of Brexit. Oil also remains a key factor to be watched out for because it denotes the global inflationary expectations and it would have relative implications for the overall currency pact. But if you look at for India, it would be the confluence of the events of demonetization, RBI, it would be the confluence of events of demonetization, RBI rate cut as well as budget.
Thanks very much for that, Poonam. Let's start with the economic backdrop we are sitting in right now, not only for India but globally, at least the emerging markets. And emerging markets is not one homogeneous pack. There is one, the Asian emerging markets, and the other is the commodity-centric markets like Brazil, some of the other ones like Russia. In fact, these are the ones which have been relatively resilient because commodity prices rebound very sharply. But Shogata, I'll start with you. Lay the economic background for us, how things paired in this particular year, because of which the performance was the way it was. Poonam was talking about the various ones. And in that light, how important or watchful we should be in 2017.
You're absolutely right. I mean, you and Poonam laid the basic the basic scenario that, I mean, it was amazing how stable the rupee had been despite all the volatilities, the enormous amounts of disruptive outcomes, political outcomes, economic outcomes that happened during the course of the year. Absolutely steady, and this was wonderful for investors, although exporters might have suffered a little bit. Remember, the first move up or whatever, the first EMFX complex, the emerging markets complex weakening happened after starting in December with the Italian vote. I mean, with a move to safe haven, then the outcome of the US elections, and then the hike by the Federal Reserve. So that were the two major points at which the emerging market currencies began to weaken. Going forward, I think India still looks very strong. Of course, I mean, there will be a transient, we hope, hit on growth. But investors will go beyond this. I think there are some critical features to watch now as far as India is concerned. Just before that, the entire emerging market space is beginning to look a little better, as you mentioned again, because of the strengthening of the commodities complex. Some of the commodity intensive emerging markets look better, and India is part of that. However that complex moves, India will move. The key things to watch now, first is the resolution of the GST, the entire GST negotiations. I mean, if GST can move forward. Secondly, the budget. And third, over the next 3 months or so, how the economy begins to look in the post remonetization scenario. So these will hold. However, having said this, we do expect that the Federal Reserve will probably be a little bit more aggressive in hiking rates than we had initially expected, if not 3, at least 2 for the year. And given the fact that other emerging other developed markets will probably not be able to will significantly expand their quantitative easing, we think that the dollar is likely to strengthen from there on, and that will have an effect on the entire emerging markets portfolio.
Bhaskar, at your desks, the Treasury desk, how did you observe the first half of this year? We went very close to the 70 mark, then retreated because emerging market currencies were kind of finding cover because of a slowdown in China, and then last 1.5 month has been pretty challenging. What are your thoughts on the way New Year could be for the space and in Indian rupee?
Good afternoon. I think 2016 nobody predicted right. Nobody predicted that Brexit will happen. Nobody was in the camp that Trump will win. Nobody knew about demonetization. So these are the 3 major developments that shook us in the last part of the last quarter, you can say. And that's when the big movement has taken place in dollar rupee. In fact, the traders in dollar rupee market used to get bored because of rangy kind of movement for most part of the year. Now going forward, obviously I have to put a spanner saying that nobody knows what is going to happen in 2017. However, having said that, let me tell what I am expecting, at least from the dollar rupee and then other currencies. First, I am thinking that dollar rupee is going to remain in a, it is definitely going to depreciate a bit, not to the extent that it has happened in last 1 month, but definitely it is going to depreciate in a manner, by say 2 to 3% per year kind of thing. There will be ups and downs. Obviously, nobody can predict that right now. However, I am expecting a kind of, move towards, slowly move towards maybe 69 in 2017. But if you look at the actual, value of rupee versus other currencies, we are almost like fair valued. So therefore, I don't see huge depreciation going in the dollar rupee. And then comes the dollar index. If dollar index now moves, say, beyond 104.40 or 104.50 and goes higher than that, which we have not seen for many years, probably that will have an impact on not only dollar rupee but also in all other currencies. But given that the Indian fundamentals are strong, given that in the next few quarters we are going to do better than what we had done in this quarter, given that people have been watching our demonetization move and people have been looking at us as an investment destination, all this is positive for us. I think we should be home and dry in 2017.
Right. We have dissected how the year has been so far and monitorables for the next 1 year. But let's also talk about or differentiate between the two factors. Emerging markets, the currencies were vulnerable for some of the domestic reasons, but the biggest point has been the sharp rally in dollar index or the dollar, especially in the last part of this particular year. Of course, 14-year high is what the dollar index went to. So Irene, let me come to you as a foreign investor or somebody who's sitting in the heart of the financial markets there in Singapore. How did you read the external factors because of which EM currencies were compressed, particularly the dollar's sharp rise. Did you yourself had envisaged that?
Well, basically our view is that we are looking at further strength of the US dollar in year 2017. Against the Asian currencies, we think as a whole, we are looking at average depreciation of Asian currencies about 3.4% against the US dollar in year 2017. And there are a couple of reasons for that. First is we know the Trump administration probably is going to be quite pro-growth, and that should be positive for the U.S. economy. And in view of that, we are looking at the possibility of the Fed continuing to high interest rates through year 2017. At this point, we are looking at a 50 basis point hike in year 2017 to be followed by 75 basis point hike in year 2018. So the high interest rates in the U.S. Should underpin the U.S. dollar, and also we are aware that the Trump administration is probably going to be using fiscal policy more aggressively in boosting growth. So in terms of interest rate differential and growth differential, we feel that it's going to be constructive for the U.S. dollar versus most of the Asian currencies.
Right. Abhishek, let me come to you now. You are somebody who also is a practitioner of strategy for making money for clients or helping them in hedging their bets. How was this year for you as far as your clients were concerned? There were pretty sharp moves on both sides. Before we talk about how are you positioned now on your book, talk to us about how did it fare for you this year? Was it challenging?
No, I think markets volatility is good, Ajay. I mean, last 3 months we have seen a lot of action, which is pretty good. I mean, as Bhaskar was saying, it was becoming very boring, but now again 2016 was quite interesting. And I see that 2017 is even going to be more interesting. And a lot of lessons to be learned in 2017, I guess. We're going to see big moves in the bond markets. You're going to see big moves in the equity, commodities and foreign exchange markets in 2017. So we're keeping our fingers crossed so that we get the right trend and it can be beneficial for our clients and everybody around us.
Shugana, let's come back to that point, that economic backdrop which we are in. When we started the year, there was a lot of hope. In fact, by December quarter, things, at least the initial signs were that corporate earnings will start growing and then, or widening, I would say. The utilizations in corporate India would start looking higher, the asset utilization, and hence the GDP uptick were starting to indicate towards higher trajectory. All of that had got delayed, and in this light, if globally the pressure remains, the dollar rally, as Irene was also indicating towards, may have some more room on the upside. At least the first few months, pressure on rupee is not going anywhere, isn't it?
I would agree with you, because I mean now, of course, I mean a very, very key component that comes in now. So I mean, let's get over the GST move, because even if it gets passed, even if it gets started in April, which is relatively unlikely as of now, but I mean, let's assume that. So that will still take some time to get traction, and probably another year or so. So the key thing to watch now is what happens to the budget. I mean, what are the key levers that the budget uses? You're absolutely right that given whatever, I mean, there were some problems, there were some headwinds that had crept in with the growth. This year, after the good rains, we were expecting that demand would strengthen. After the concentration of consumption in the 7th Pay Commission, we were also expecting some consumption to come into play. So that seems to have, that momentum seems to have lost a little bit during this quarter and probably the next quarter. And it's unlikely that capacity utilizations will increase very much significantly. So that will not have a lot of impact on private investment. So consumption, probably if the post demonetization moves are done quickly, effectively, I think consumption can still come back to track relatively quickly. But that doesn't say anything about investment. So investment has to come in from the government. Now the good thing in all of this is that after the proceeds of the demonetization, whether it be tax revenues or non-tax revenues, whichever way the government comes in with the extinguished currency, with the so-called extinguished currency, if the government comes in there, so they will have a lot more resources to play around with. What they choose to do with the resource, how much to allocate to boosting consumption, how much to investment, rural infrastructure, etc., I think that will begin to play a very, very strong role in boosting both consumption, thereby capacity utilization, and thereon investments. So we wait and watch what the strategy is.
Bhaskar, what are your thoughts, the way economy, the footing at which we are at right now in the new reality, and in this light, also take into account the outflows we have seen from emerging market bonds, which we were also beneficiary of in the last couple of months at least. What are your thoughts there?
I think it's very difficult to predict what future will hold for us. Having said that, as I said in my first, we are going to definitely do better than what we are doing today because of whatever demonetization or delegalization of the currencies and so on and so forth. The consumption factor has been a casualty in this quarter, and probably the same kind of trend you can see in the next quarter. But going forward, what we believe is that either driven by the government's investment in sectors that government chooses to invest, or maybe some kind of we don't know, I mean some kind of shops or something which comes to give consumption a boost. Whatever, I mean, in whatever way it comes, either from the consumption side or from the investment side, I think it is going to be a positive for India scenario. So therefore, I am more positive that things are going to improve further on from today onwards or from now onwards. So I am looking forward to your growth coming back into the markets, and stock markets also going into positive territory. The negativity that we had seen in a few in last few days going away, and again India signing story coming back into the fore. So I am little more hopeful than many others.
Right, Bhaskar, you seem to be sounding much more optimistic at the start than all the panelists over here. But let's get a foreign opinion on in the Indian rupee. Up till Irene have been talking about EM currency as a pack, but rupee in specific, Irene, they're sitting there in Singapore. You will have much more dispassionate opinion on our currency. What are your thoughts?
Well, basically, just to clarify, we are constructive in the US dollar. So we expect the majority of Asian currencies actually to weaken against the US dollar in the year 2017. And we feel that among the Asian currencies, we are more bearish on those currencies and those countries which are highly dependent on external trade. So we are most bearish on the Korean won and the Sing dollar. And for the better performance, we feel that India and Indonesia's macroeconomic fundamentals should make the currencies less vulnerable compared to some other Asian currencies. So among the better performance, we are actually looking at the Indonesian rupiah and the Indian rupee.
Abhishek, talk to us. How are you positioned right now in your book, in your actual trade right now? What are your thoughts? What levels are you watch out for? And what are you advising in your advisory all these big clients you work with?
So what I have a feeling is that 2017 we're going to see significant developments happening in China. Now that's going to change the way we look at markets. If you actually observed Ajay last few days, there's a 25% reduction in the Chinese foreign exchange reserves, which is normally not the case. They are the ones who always accumulate reserves, put it in the US back for investments. Over the last many months, China have not bought a single reserve in US. In fact, they have been cutting down their debts in the US, bringing it back, intervening in the foreign exchange markets in China and trying to protect their currency. Now we all know if China depreciates, to new levels. What we have seen, like it goes to 7.2, 7.3, possibly what we are expecting in 2017, or the 10-year goes to 3.8 or 4%, then we're going to see a significant problem happening in China, and then possibly India, which we all know that the inflation is low and fiscal deficit is in control, the budget is possibly going to be positive, etc., etc. We will not be isolated if China gets a hit. That's my first worry. Secondly, in the overseas markets, we're going to see some action happening in Europe. With Merkel, things might just get a little worse because of her inclination towards the immigration and etc. Things are not looking good in France. They might talk about breaking up, not participating in the euro anymore. And in the Middle East, again, things are there which are again a little turbulent.
Right.
So I think the China story, US extremely hawkish.
In fact,
10-year, I am very positive.
Right.
So looking at that, we are.
Yeah, Abhishek, just hang on there. Let's break that point, each point one by one. In fact, very glad that you brought that up, and that was going to be my second round of questioning, which is what are the challenges which lie ahead in 2017? And the point which they have highlighted regarding the China angle, the way commentary or rhetoric between Mr. Trump and China has started off. Shagata, what are your thoughts? Abhishek has raised a very interesting point that the reserves addition is going down. In fact, outflows is something to watch out for in China. And of course, you were talking about the way trade relations are getting sparred between China and US. How is this a big risk for EM currency, particularly for India?
It is a risk. I mean, if the Chinese reserves are going down because they had been intervening to try to reduce the depreciation of the yuan, the RMB against the US dollar. But remember that markets have not been completely rattled by the depreciation of that currency. I mean, this was because late last year, since the beginning of 2016, this year, markets had been focused not on the RMB USD pair, but on this basket of the currency, Chinese basket, which is called the CFETs. And after a bit, I mean, if you see the track of that CFETs currency, that's actually stabilized and currently is at the upper end of the band. It's very strong. Remember, the first thing that Donald Trump mentioned once he came in was that the first on day one that he would mark China as a currency manipulator. And currency manipulator is Chinese rupee falling, weakening, devaluing, depreciating the Chinese currency. So I'm not very sure how much space there is. On the other hand, China's growth indicators seem to be increasing. Their capital flows, outflows have slowed down. Their growth seems to be getting better. So I mean, I think the Chinese, the PBOC and SAFE are going to make sure that they keep their currency within a reasonable band of this currency, not do too much unless there is some huge outbreak in China in terms of the credit situation in China. There are a couple of large bankruptcies. I think that's controlled. I think that the focus which we heard, I think will shift to Europe more than China. I think China's story, as more or less, there are always risks. Of course.
As Abhishek was pointing that Europe is another risk to watch out for. Irene, very quickly, what are your thoughts on the rupee in particular in backdrop of all these events as Shagata and Abhishek raised the global backdrop?
Yeah, actually, I think among all the Asian currencies, we believe that India is less exposed to globalization and less exposed to potential negative impact of Trump administration on global trade, because India is more a domestically driven economy compared to Indonesia, which is also a domestically driven economy. So that's why we are more positive on the rupee and the rupiah compared to those countries which are exposed to globalization and external trade like Korea and Sing. So specifically on India, apart from what I said, being a domestically driven economy, we also feel that reforms in the country are making progress, and that should be supportive to the currency. Although we do expect the rupee to weaken against the dollar, but on a relative basis, we feel that it should be a better performer. And in terms of inflation, we are still looking at another 25 basis point cut by the RBI in the first quarter of next year on the back of lower than expected inflation that we have seen so far. So being a high yielder and also a carry currency, I think so long as reforms are on track, fundamentals are okay, I think it should be more resilient for the rupee compared to some of the more exposed Asian currencies.
Let's have Abhishek have the last word. Abhishek, one word answer. What's the level to watch out for in 2017 for the rupee dollar pair?
I think we are looking at 70-71. We're still very bullish on the US dollar.
Right.
We're expecting the index to hit 108, 1010, like I discussed, and the rupee 70-71.
All right, guys, the lady and the gentleman, all of you, thank you so much joining us on this special coverage of Emerging Market Outlook for 2017 with Rupee in Focus. Thanks very much for watching.